Hi, and we are continuing to analyze the topic of temperature markets on Polymarket. Today we will look at a case that is slightly different from the previous ones. Previously we were looking for a hidden factor that changes the obvious outcome. For example, the marine layer in Los Angeles or smoke in Seattle. Today, however, the correct answer is surprisingly simple and almost boring. The temperature will simply turn out to be close to the usual norm. That is precisely why it is underestimated by the crowd, which loves to bet on more interesting outcomes that deviate from the norm. Let me remind you about our Telegram channel. Please subscribe. There we analyze more events like this, more other categories, and have some information. The mechanical nuance of this market is important from the very beginning. We have a market, will the highest temperature on August 16th be like 80 to 81? This market is not structured as a threshold above X degrees, but as a ladder of narrow 2-degree ranges for the same day. That is 78, 79, 80, 81, 82, 83, 84, 85, and so on. And all these ranges are traded simultaneously and in total tend towards 100%. It's the same principle we saw in multi-outcome political markets like the Hungarian Prime Minister election, only here, instead of 6 candidates, there are a dozen adjacent temperature windows. Because of this, a narrow range intuitively looks like a risky, unlikely bet. After all, the window is only 2 degrees wide, but if independent models converge on one specific value, the probability mass concentrates around this value much more densely than it appears to the eye. And then a narrow range around the point of model consensus can be a much more probable outcome than betting on a wider but less accurately predicted deviation. We have the same 3 tools. This is windy.com. Here we will need the temperature layer and the hourly scale. But here we are not looking at the arrival of a cold, yes, or warm, front, but at the dynamics of the sea breeze. The way the flow of cool air from the Atlantic, for example, yes, enters the city in the second half of the day and limits further warming, specifically on August 16th. This is summarizing what we were doing. The second tool is Wizard.gov, the hourly forecast here for the station. If we take New York, that's the Central Park Station, which is the official climate station for New York, and it's precisely the one that most such markets resolve against rather than the LaGuardia or JFK airports, which often show slightly different values due to their proximity to water and asphalt surfaces. Also, I'm reminding you about comparing the two models. This is very important. That is, if we want to compare, yes, we see the differences, so we need to compare and base our decisions on the agreement between the models. If the limit is 1 or 2 degrees, then the models are in agreement. If it's more, then the models are already diverging. Because of this, doubts arise. Additional analysis is required if you still want to enter this event. We also have AccuWeather and Wiser API as tools. Let's take a moment to break down with a very concrete example exactly why we choose to put a yes on the range of 80 to 81. We open yes Polymarket, specifically the weather section, the market. Will the high temperature in New York be some value? Well, in our case it's 80 to 81 on August 16th in Central Park. That's approximately 27 degrees. And our price is 53.3 cents for yes. At first glance, the market looks as if it's undervalued for this specific range precisely because it sounds too mundane. The climatic norm for mid-August in New York is around 83. We can check this using the Wizz Air API. 83 degrees Fahrenheit, and part of the crowd automatically bets on ranges closer to the norm or higher, assuming a typical hot August day. Step 1. Windy. We need the wind layer. So we open the wind layer. Yes, I'll show you with an example. And we need the temperature layer. This is important. We analyze both the wind patterns and temperature readings to determine exactly where a cold front is located, and then we calculate how long it will take for that front to reach a specific point. If we take, let's say, we analyze the temperature at this point, then we look at how long it will take. The temperature here is 58. Do you see its direction? So, roughly speaking, it gradually cools this zone, but here it's just a hot climate. Because of this, it doesn't allow this point to cool down completely to the same temperature as it is here. That is, we can look at the wind, what our wind speed is, how many degrees it is here, and in how much time the wind from this direction will reach us and cool down, or conversely warm up our zone. And also step 2 is that we look at the specific temperature for a specific station. For example, if it's New York, then it's the Central Park station measurement. And for August 16th, the model showed a daily maximum of about 26.7 degrees Celsius, which fits exactly into the 80 to 81 range. We also compared two models afterwards, that is, we toggled back and forth like this. 75. You see, there is a discrepancy here, but in that one on August 16th in New York, specifically in Central Park, the discrepancy was 1 degree Fahrenheit, just like here, which simply gave us a signal for further analysis and confidence that we are moving in the right direction. Step 3. We open WizardGo. It confirmed the hourly forecast for the station for us. That is, we selected yes, Central Park, looked at the daily maximum at the station, and verified that, well, WizardGo showed us a peak of around 80 degrees Fahrenheit in the middle of the day, followed by a rapid leveling off due to the wind direction change. And well, it is important to understand the structure of the discrepancy here. The market is pricing the probability at 53 cents. So yes, we see, the market is pricing the probability at 53 cents. Because a 2-degree range intuitively seems like a narrow target, and the everyday feeling of a typical August pulls expectations toward higher or more typically summer values. But if the models are independent and converge tightly on this specific value, the actual probability of hitting this narrow range is much higher, that is, in the area of, say, 65 to 70%, and not 53%, as we see here. And the gap here arises not because of a hidden physical factor, as in previous cases, but because of the very nature of narrow ranges itself. The crowd systematically underestimates the accuracy of the model's consensus forecast when the result seems too ordinary to be an interesting bet. In total, we are betting $705 on yes at an entry price of 53 cents. And in case of success, as we can see, we take home $1,300. The same fundamental points as always, but with one addition specifically for fork markets. Check the station for New York. That is what Polymarket is offering us. It's usually Central Park, not the airports, and the difference between them on coastal, windy days can be noticeable. Check the time of day for the maximum recording. And most importantly for ladder markets, do not estimate the probability of a range by eye based on its width in degrees. A 2-degree window around a dense cluster of models is often more probable than it seems intuitively, and a wide range without model consensus can be a much less reliable bet than it looks at first glance. Well, I would also like to ask you to subscribe to our Telegram channel. As I have already said, we analyze more events like this there, and most importantly, events concerning future outcomes, not past ones. There is a lot of interesting stuff there. Other categories, other events, and some insider information is also present in our channel. And subscribe to analyze more cases like this. Bye everyone. Leave comments, share your analysis, and bye everyone.